Mark Minervini is widely considered to be one of the greatest traders who has ever lived. Starting from humble beginnings, Minervini dropped out of high school to pursue a career in music. After gaining success as a drummer, he sold his music studio to fund his trading career. From 1995 to 2000, he returned an astonishing 33,000%. Minervini won the U.S. Investing Championship in both 1997 and again in 2021. Let's take a look at this legend's core trading principles. Number 1, avoid chasing extended stocks. One of the mistakes Minervini made early in his career was chasing extended stocks. He'd hear about a hot stock and buy it far above its proper buy point, only to watch it come crashing down right after he bought it. In order to properly time his entries, Minervini began to look for what he deemed the volatility contraction pattern, or VCP. Simply put, Minervini likes to see a stock's volatility contract from left to right, so that the stock appears to be getting tighter and tighter. Looking for stocks with these characteristics allows Minervini to buy stocks that are under accumulation and showing an absence of distribution. It also helps him to make sure he's buying stocks emerging from proper consolidations rather than those that are already extended and ripe for a sharp correction. Number 2, cut your losses. In the late 1980s, Minervini was frustrated with his returns. He had some big winners, but was still losing as a trader. He decided to review his past trades to see if he could determine what was really going on. He had been cutting his losses on most of his trades, but once in a while he would fall in love with a stock and continue to hold it even if it fell below his predetermined stop loss. He decided to do an experiment. What if instead of riding these stocks lower, he simply cut his losses at 10%? How would that affect his returns? The changes were astonishing. Simply selling his losers at a 10% loss rather than stubbornly holding onto them would drastically alter his statistics. Rather than being down for the year, he would have been up over 70%. From that day forward, Mark made it a point to quickly cut his losing trades. Like his mentor, William O'Neill, Minervini looks to cut his losses at a maximum of 8%, with most of his losing trades coming much quicker. Number 3, sell into strength. Minervini loves to sell stocks into strength, on the way up before they have a chance to pull back. He doesn't worry about what a stock does after he sells it. By exiting on the way up, he locks in his profits quickly and limits his drawdowns. The disadvantage of this tactic is that some stocks will head higher after they are sold. In addition, because Minervini sells stocks quickly, he will have to look for ways to re-enter them or look to buy another stock instead. Simply put, he will have to do more trades in order to produce a large return to make up for the fact that he's not getting one huge winner. While stock market wizards William O'Neill and David Ryan made their fortunes playing for large multi-month moves, Minervini has found selling into strength and high portfolio turnover to be the best tactics to produce consistent returns, while at the same time keeping drawdowns relatively small. Number 4, progressive exposure. One of the most important concepts I learned from Mark Minervini is progressive exposure. When I first started trading, I'd plow in. The market would have a follow-through day, and I'd think, this is great, the market has bottomed, let's have a party. I'd quickly move my account to fully invested or even onto margin. This type of tactic would work wonderfully if my analysis was correct, but it was an absolute nightmare if I was wrong and stocks began to move against me. Instead, the professional starts out slowly. Minervini sums it up perfectly when he states, there really is no intelligent reason to increase your trading size if your positions are showing losses. Only when he has some profits does this market wizard start to get aggressive. This allows him to both get some feedback from the market as well as to limit his drawdowns. By only getting aggressive when he has a profit cushion, Minervini is able to risk recent gains rather than digging into his principal. It's extremely difficult to communicate how great Mark Minervini is. What Michael Jordan is to the basketball world, Mark Minervini is to this trading community. To learn more about Minervini and his trading concepts, be sure to pick up a copy of his books.